During a presidential election year, it's natural for investors to try to find a connection between who wins the White House and which way the stock market will go. During my years as a financial planner, I've even had plenty of conversations with people who are wondering if they should get out of the stock market altogether before the ballots are counted. But a look at history might offer some reassurance. So in this short video, I'm going to share with you a few visual aids to show you what the 2024 election might mean or not mean for your investments. Hey everyone, if we haven't met yet, my name is Jake Skellhorn. I'm a certified financial planner and the co-founder of Spark Wealth Advisors. This channel and my firm are dedicated to giving you more confidence and clarity with your money. First visual I wanted to share is very big picture. The next one will be a little bit more granular, but it is showing the returns of the S&P 500 since 1926 until the end of last year, December 2023, under various different presidents. So the blue areas of the graph obviously represent a Democrat being in the White House and the red areas being Republican. But it's really not hard to see here that there is an identifiable trend, and that is that the market has always trended upwards no matter who's been in power in the White House. Yes, there's always uncertainty leading up to a presidential election and who will gain or retain power, but there's also volatility at any point during any given year in the market as well, as highlighted by these small dips in the graph. So always try to remember that when you're investing, it's a long game. And when you're investing in the stock market, you're not investing in politicians, you're investing in companies. These companies are always going to continue to try to grow their business, better serve their customers, and innovate no matter who holds the White House. So this next chart is a little bit more granular, and it shows the monthly returns either in non-election months, the month where a Democrat won the presidential election, or a month where the Republican candidate won. So down at the bottom here, you have the monthly returns. This is the zero line. Anything to the left of it is going to be a negative return for that month. And then anything to the right is going to be a positive return. So I draw this line down the middle to show, first and foremost, overall, as you can see, positive returns are far more common than the negative returns. But if you look closer, these blue lines represent months in an election year where a Democrat won. Again, red ones represent when a Republican won. There's really no correlation to negative or positive returns for either party. It's all over the place. It's very spread out. And rarely are they very large returns during that election month either. Now, obviously, building up to an election, there is a lot of money going into the stock market based on what people might believe, hedge funds placing bets on who's going to win, etc. So after the election, naturally, there is probably going to be some volatility in either direction, but as we saw in the last chart, the noise settles and historically the market has trended upwards. And lastly, since we have had such strong returns in the market so far this year in 2024, that doesn't necessarily mean that a market crash is right around the corner. So in this chart, we have the blue bars showing the average return during a US election year, which is 11.57%. Then we have the average return the year after the election, which is slightly lower at 10.67%. The main thing I want you to take away from this chart is that there are far more positive years, both the year of an election and the year after an election, than there are negative years. And there's also no correlation between who wins that election and whether the next year or current year is a positive one or a negative one. So that is about as political as I will ever get on this channel. Hopefully it eased some of your nerves to show that the president really doesn't have a whole lot of influence over the stock market over the long run. And while there's a lot at stake this election and every election, I don't think your investment portfolio is going to be one of them. Now, after watching this, you might be wondering what you should do. In my opinion, you should build a financial plan and an investment portfolio that matches that and stick to the plan. That's the most important thing you can do rather than trying to speculate and control things that you can't control. If you found these visual aids useful or you enjoyed this video, consider giving it a like and subscribing to the channel. Thanks for tuning in, and we'll see you in the next video.